if you're a beginner, you might want to stick to the end of this video because I'm going to share with you the simplest way for you to trade crash 500 index successfully. Okay, it's a very simple strategy for you to cash up with it. Right now we are on the crash 500 index market, and I'm going to break down some things you need to understand in this type of markets for you to be able to trade this market successfully. All right, now the first key is that this market is highly volatile. Okay, so that means that this market can go against your trading decision at any given time. Okay, it doesn't always respect your trading decision. All right, so now how do you trade this market to go in your decision? Now this is whereby you implement a strategy. Okay, implement a strategy on your trade. All right, so we are on the 1 minute time frame right now. The first thing you want to do is to look at the 1 hour time frame. So you go over to the 1 hour time frame right here. So we are on the 1 hour time frame, and what we're seeing here is that this market is buying right now. Okay, this market is buying right now, and if you take a look, right, you see that this market have sold. So the first thing you want to look at on the 1 hour time frame is how long the market have bought and how long the market have sold. I hope you understand what I'm saying. Now we are taking a look at this point right here. We can see that this market have sold for a long period of time. Now let's check it here. If we trace it downwards to this point, we can see that this market have sold for a long period of time, and the next step is for the market to buy. Okay, now this market have sold, it needs to buy again. Okay, because that's how the market structure is. The market buys, it sells, it buys, it sells, just like that. Okay, now we're looking at a sell position right here. So the next step is for the market to buy on the 1 hour time frame, right? So now this market is buying. We'll go over to the 1 minute time frame, then we zoom out a little bit. Okay, now this 1 minute time frame here, this shows us that this market is now buying, but because it's the 1 minute time frame, the next step is a sell, meaning that a spike is going to come into this market at any given point in time. All right, at any given point. Now if we go back to this 1 hour time frame, I want you to take note that this market have sold, right, and now is buying a little bit. So there's going to be a a buy position on the market, even though there's going to be a sell. So we want to take note that we have a good opportunity to place multiple buys on this market, right? So we'll go back to the 1 minute time frame, but we don't want to place a buy at this point. So we're going to put on some indicators into our trade. So put in the RSI first. That is the most simplest indicator for you to understand. The RSI, you choose on the levels, right? The levels you're going to put here on the level of 90 is going to be on sell. The level of put here to 10, you put buy. Okay, then the style, you put it on 4 pixels, then you click on done right here. The style right here, you put it on 4 pixels, and you put the color on blue. For the levels, you put the color on red, right? You put the color on red, then you click on done. The period is 14. Okay, all right, now take a look at this, guys. Now this simply means when price gets to this point, the market would sell, even though you don't have to go over to the 1 hour time frame to confirm this entry. So when price gets to the level of 90, we place a sell, and when price gets to the level of 10, we place a buy. So these two levels help us know the overbought and the oversold. Okay, overbought and oversold. So right here now, what we're seeing here is that the market is currently heading upwards to the overbought. Remember, I told you guys that this is not the best position for you to place a buy. Okay, it's not a good position for you to place a buy, because if you place a buy, a spike could come into the market, because we saw here on the 1 minute time frame that the market has been buying for a particular period of time. Okay, so we're not going to place a buy, we're going to wait for a good opportunity. Now I'm going to place another indicator which I want you to take note of. It's called the MACD, the MACD indicator, which is this one right here. You put the fast EMA 14, slow 24, and the MACD SMA on 10. You apply it to close. You don't add any levels. The main here, you put on 4 pixel, the signal on 4, color red. Okay, you click on done. Now this is perfect. Okay, This is perfect. Now when price gets to here, you see the market sold at this point here. The market sold. Okay, the market sold, and you want to be taking your candlesticks for about 3 candlesticks per trade. Okay, just to be safe on the market. And if you want to risk about 2% of your trading capital on this type of trading and use the smallest loss size as possible for your entries, and remember that we are scalping the market, so we are just taking small price movements, which is advantages of small price movement from the market. So you are taking advantages of small price movement from the market. Okay, you don't want to be in the market for too long. You just look for a good opportunity, then when you have gotten that opportunity and that profit, then you leave the market. All right, you leave the market. So that is it, guys. Now you can see that it's very simple for you to trade this strategy. Now you might look at it that this is easy, but on the other hand, it's also hard. Okay, now it's also hard, and for you to understand the strategy, you need to practice it very well. Okay, you need to practice this strategy very well so that you'll be able to understand it better. So don't just jump into the market just because I've shown you guys a strategy that like this that works. What you need to do is to go into your own trading app and practice first when you have mastered the strategy before you can then implement this strategy on your trade. Okay, before you can implement this strategy on your trade, just as you can see, like I'm doing it right here. Okay, just I'm doing right here, and you need to pay close attention to price action as well. Okay, what I mean by the price action, if I zoom out here, see at this point, like I said, the market sold. This is the 1 minute time frame, right? The market started to sell from here downwards to this point, and if we take a look at this here, downward to this point. So the next step is for the market to buy again. The market is going to buy, but because you are scalping the market and you have a small capital, okay, you want to manage that your capital as much as possible so that you don't blow your account. Okay, so that's why you're taking advantage of small price movement just to grow your account. So if you have a smaller account, you can't buy and hold the market because you're going to end up blowing that trade, right? So if you have a small account, probably you have $100 account or a $50 account, you can just take just 3 candlesticks using advantages of small price movement, growing that account, grow that account up to $500, $1,000 account. Then you can buy a trade and hold when you see a good opportunity. Okay, like I said, this is a good opportunity for those that have a big account. The market has sold for a long period of time, a very long period. So the next step is for the market to buy upwards. We're seeing an upward trend, just like we saw here on the 1 hour time frame here. See here, the market starts to sell and the market need to buy again. Need to buy to make up for this sell. Okay, I hope you understand what I'm saying. Like this indicator that I've shared here, which we tell you when price is at the overbought and when price is at the oversold. When price gets to this point here, you place a sell. This is it. Okay, very easy. Here you place a sell at this point, the market will sell. Once it gets to this point, you know that it's time for a buy, you place a buy. Okay, if you take a look at this is a 1 hour time frame. I only trade on the 1 minute and the 1 hour time frame. Those are the 2 time frames that is much understandable, right? Here again, basically you see when it gets to this point, the market sold. When it gets to here, the market started to buy. Okay, but if you are on the trade and you saw that the price just got to this point, do not just place a sell immediately. You need to look for a selling trade first. When the market starts to sell, that's when you follow the trend. Do not just place a sell and think that it will just happen. Always follow the trend. When the market is selling, you sell. When the market is buying, you buy. But you might want to stick up to price action. Know when the market's at the overbought and when it's at the oversold. All right, I hope you understand what I've just shared to you guys. Do well to like and subscribe to this channel, and also join our Telegram channel where I give free signals on boom and crash and forex and also other indices as well. Okay, So if you found value, do well to like and subscribe to the channel, the Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next one.